Thanks. Amazon's 7th annual Prime Day kicking off about 3 hours ago. So can this be the event that kickstarts the stock to bust out of the narrow trading range we've seen over the last 9 months? Joining us now, Mark Mahaney, Evercore ISI head of Internet Research. And Amazon is one of his top picks in the sector. He has a $4,500 share price target. Mark, good to see you this morning.
Good morning, Mike.
So we talk about Amazon stock as having been kind of stuck since Labor Day of last year. Yes, it's pretty much sideways, down a little bit from those highs. Also, though, up 80% over the last 2 years. So I guess it's a matter of framing. What actually do you think is going on? It's been holding the stock in place since last summer.
So, Mike, I think it's partly that you had this pretty dramatic rise in the stock last year, as it was correctly perceived early on as kind of a COVID winner. So you've got a consolidation phase that comes after that. And then there's some slightly greater risk associated with the stock in terms of heightened regulatory risk and then arguably more intense competition from omni-channel retailers like Walmart. Cloud space just gets tougher and tougher with Azure and Google Cloud both showing a lot of momentum. So I think there's a little bit of competitive risk. And then there's the Bezos factor. We are weeks away from when he'll formally step down as the CEO. He'll be executive chairman. But there's always going to be some question in investors' minds as to how well Amazon can proceed after Bezos leaves active management.
Sure.
And maybe Mike isn't anybody else. There's also a macro call here. When we move away from value growth, that's also the key, one of the limits on the stock currently.
Right. That makes sense. Although a few of the things you mentioned there, the regulatory risk, potential, ongoing competitive challenges, whether, like you mentioned, Shopify or some of the omni-channel guys, those are pretty much constants at the moment anyway, or at least you can't see the end of it. What do you think it'll take for investors to gain some kind of confidence or not about management of the company post Jeff Bezos?
That's a really hard one to know. We're probably not going to know for several years what the impact of Jeff no longer running the company on a day-to-day basis is. I think operationally, you're not going to see at all any change in the business. That S committee, that those people, the group of 20 people around Jeff, that really has changed barely in the last 15 years. It's one of the reasons why the company has done so well, executed so well in a variety of different industries. So I don't think you'll see that. The real X factor is going to be 5 to 10 years from now. Are you going to have the same level of product innovation that you had over the last 5 to 10 years? So I don't know if investors are going to see that. I think the real unlock on Amazon's stock, call it in the next 6 months, it's just going to be this market shift back to growth, because as we shift valuation frameworks to deep into 22 and into 23, and that's going to happen in the back half of the year, then the secular growth premium that Amazon has typically benefited from is going to come back in spades, and Amazon's going to start outperforming. It's why it's our #1 pick in mega cap.
And presumably, there's at least a little bit of uncertainty about what the growth rate will settle back to, I suppose. You had this huge bulge in growth on the retail side of things in the last year, as you mentioned. So what do you think is the run rate of top line growth, let's say, for Amazon from here on out?
What was so impressive is that prior to COVID, this company did for something like 15 years, they were doing consistent 20% top line growth. That is such rare air. You just don't see that kind of consistent premium growth. And what was interesting about the guide they gave for the June quarter is they're still at it, despite the fact that the comp almost doubled. That is, the prior year's growth rate was almost 2x what it was prior, i.e. it was 40%. And so our guess is that given how well they're positioned against advertising, cloud, and retail, this company continues to be able to print darn near close to 20% growth for the next several years. As investors gain confidence in that, the stock will re-rate. It's one of the few companies in the internet space that's actually derated. The multiples come down, even though the growth outlook has re-rated, gone up.
It's been commonplace to say, and it makes a lot of sense, that, in a distant scenario in which there was some kind of a breakup mandated of the company, that maybe the sum of the parts has more value, right, if the cloud business is separate or something like that. But are there business practices that you think would be particularly damaging if there were some other measures, other restrictions on them, whether it be, promoting Amazon's own products or any of those things that are being talked about right now? Are they game changers?
So you're right, Mike. If there was a forced breakup of the company, particularly if they were forced to spin off AWS, which I think would be a very hard thing to do. If you did, that sum of the parts math would cause Amazon share price to rise. That would be an accretive move. I don't think they get full value for AWS within AMZN. Now, are there other things that regulators could do? There's two companies that I look at that have these potential conflict of interest. They own marketplaces and they compete in said marketplaces. One is Amazon, one is Google. So yes, if they were no longer allowed to compete in those marketplaces, or they had to somehow separate first-party retail and third-party retail, that'd be a very hard thing logistically to do, but that could be an issue for Amazon in terms of its future growth.
Shepard Smith here. Thanks for watching CNBC on YouTube.